Ladies and gentlemen, this is still happening. The gold price is surging. The gold price against the GBP, the British pound, is going up. This is still happening, what's been happening for last 25 years, and the gold price is running up. The gold price is gaining strongly to British pound. The British pound is losing. Look what is happening at the moment. 2,599.29 pounds, 2,592 pounds. This is what is happening. 2,592 pounds. The gold price is almost on its record level. The last record level in British pounds was 2,620. 612. However, that was for very short time, few hours. The real record that actually happened few times, 3 times, 1, 2, 3, is 2,550 around. So today it is 2,529. So it is almost record high. The gold is going up. The interest rate in the United Kingdom is still high, but the gold is going up. The gold is going up because the Bank of England actually lowered interest rate. The last cut by Bank of England, the last interest rate cut actually impacted the gold price strongly, and it is going up now strongly. Well, this is good for people who actually are investing in gold. It is very good for people who are investing in gold, buying gold, having gold, possessing gold, because then they profit. Well, what can happen in next few weeks, next few months? Well, the British pound has this problem called interest rate, and this interest rate is now 4%, and this interest rate is very high. However, it is too high for the British society. It is not too high for the economy and for the British pound itself. It is too high for British society. That's why I bet that the Bank of England last cut was due to this society problem. As 70 million people look at the European zone, and they see what they see when they look at the European zone, they see that the interest rate in the Europe is 2.15%. That means just few days ago, weeks, when they went for vacation, and when they are now on vacation, they see those interest rates in Spain, in Italy, on banks, on those adverts, on those billboards, that is 2%, 3%, 3.5%, and in the United Kingdom, the interest rate on mortgages is 4%, 5%, 6%, 7%, APR. Even higher, and this is a huge problem because some people, they really know how to count, they really know a little bit of maths, and they understand that 100,000 British pounds on interest rate of 5 or 6 means 6,000 British pounds, 6,000 British pounds a year. But the interest rate on mortgage that is 3% is or 2%, like in European zone, it is only 2,000, 3,000. So what does it mean? It means that the British people, are forced to pay 100% more in interest rate than in Eurozone, and this is a huge problem. Why is this a huge problem? Well, if you have a house mortgage of 400,000 euros in Eurozone, let's say, in Eurozone, we can count in British, pounds. If we can count in British pounds, but we use the interest rate, ECB interest rate, and the Bank of England interest rate, BOE, and ECB, European Central Bank. The interest rate in Eurozone is 2. I'll do on here. The interest rate in Eurozone is 2.15. 2.15. Now the interest rate in the United Kingdom is 4%. So let's say that this interest rate is the same on mortgage. Just for example. This is just for example. So that means £500,000 mortgage in the Eurozone will cost you around 11k. Okay, in Eurozone, 11k a year in interest rate. 500. Okay, a little bit less than 11 because it is it will be 10.75. okay, 10 points. We can do actually exact 10.75, so 10k 75, so that is 10,750 pounds. 10,750 pounds. This is what they have to pay for 500k mortgage, okay, in British pounds. In United Kingdom, 4%, if you have mortgage 4%, 500,000 pounds, multiply by 5, it's 20. So this mortgage of 500,000 pounds in the United Kingdom has this interest rate of 20,000 British pounds, but in the European zone, the interest rate is 10,750 pounds. So it is very big problem. It is very big problem in the UK because, well, if we just take interest rate mortgage, okay, just interest rate only without repayment, that means interest rate mortgage in the United Kingdom, let's say, of course, those interest rates are higher, but we take this example. So in the Eurozone, you pay 1,000, you will pay... if we take this, I go to calculator. I will go to calculator. Where is my calculator? Well, it is in the Eurozone you will pay interest rate of 896 pounds. In Britain you will pay 1,666. Okay, so that means it is a bad situation because you have to give away a lot of money. Even that in the United Kingdom, earnings, wages, minimal wage can be higher than in Spain, is higher than in Spain, because minimal wage in Spain is 1,200 euros. If we take the British minimal wage, it is around 1,800 or 1,000, almost 2,000. Or 1,900. It is much higher than in Spain by 700 euros or 600 euros or even 800 euros. It is quite higher. But if we take this interest rate, then it is gone. It is gone. Okay, so very high interest rate in the United Kingdom means less disposable income, and that means the British are now sadly very poor, which is no good, of course, for Europe. For Europe the interest rate is low, but it's not good that the British people are getting poorer, but they can't lower this interest rate. They can't do this. They can't do this at all. Because the inflation in the United Kingdom is very high, but they are lowering the official inflation in the United Kingdom at the moment is higher than the interest rate in the bank. So it is very bad situation. So now we are coming back to the gold, because this is British pound gold now situation. The British pound has so huge problem that if they will lower this interest rate even more, the British pound will go down to other currencies. Okay, so the problem with the minimal wage will be even worse, because the minimal wage counted in euro will go down. Because if they will lower the interest rate, the inflation will go up, the British pound will go down, the wages will be less in euros, the inflation will be higher, and the gold will skyrocket. That's why the British pound is going down. That's why the housing market is not gaining against other currencies, only maybe counted nominally in British pounds, but it is losing to everything. The condition of the British pound is very important for the housing market, for the gold, for minimal wage and other things that we actually analyzed just now. For sure, now this situation is very important, and I hope British will get on with their problems, but this is very important because if there are no some assets hidden by Bank of England that actually will push the value of the British pound or their economy, then that means everything will go down. Everything will go down. And we have to ask ourselves, does the Bank of England play some game or not? Because lowering interest rate by such as important currency to level that is lower than official inflation, because interest rate is 4, but the interest rate in the bank is lower than that, and official inflation is 3.8. So, or soon the inflation will go down, everything will go in a good order, because it will happen, because the condition will get better, or we are in a big trouble about the British pound. Okay, please subscribe my channel. I hope you like it. I hope to see you soon, and watch another video which is also very interesting. Bye bye.